shouldn't know. I got secrets.
Hi there, Stephanie Kammerman, the Stock Whisperer, here with this week's Dark Pool Insights for January 13th, 2020. Hope you guys had a fantastic couple of weeks learning about candles, learning about volume spread analysis. Wyckoff, guess what? It's time to take a test. No cheating, okay? So don't stress out. This is going to be pretty easy. It's really about going over these patterns. You know, the more times that we see them, the faster we can recognize them on a chart. So you guys ready? All right, here we go. Here's the first one. Which two candle patterns are shown on this daily chart for the SPY? We have two of them. Two bullish ones, actually. I'll give you a little hint. All right, time's up. The first one is a bullish piercing candle. Remember, that's the candle that makes a lower low and then rips up halfway through that red candle, and it forms a bullish piercing. And then the second combo is a bullish engulfing. That green candle completely engulfs that red one, and we usually have a really nice rally after that, especially if you have two combos back to back. Yeah, really, really good one. All right, let's do another one. You ready? Which kind of candle is shown here? Begins with a D. Gonna give you a little hint. It's a high volume doji. And remember the rules of this. If we close above the high of the candle, that is bullish. And look at that move that IWM had. All right, let's move on to the next one. Which candle is shown here on this chart of the QQQs? Well, actually, it could have two names. And this is a high volume hammer, or some people might call it a spring. And you can see it definitely sprung forward for the QQQs. In fact, we have been moving higher than that, actually. All right, so here's another question. Back to Wyckoff. Is this accumulation or distribution? Remember, accumulation is buying and distribution is selling. And you really should get this by now. If not, it's accumulation. Remember what happens with accumulation. We usually have a seller's exhaustion candle, right? The sellers pretty much throw their flag in. That's it. I'm out of here. And that's always a good time to buy. But which candle is shown? Oh, that was seller's exhaustion. What is this line called in the accumulation? Do you guys remember what that's called? I'll give you a little hint. It has water involved and it begins with a C. It's the creek. Yeah, when you jump the creek, that is bullish. That's when we get that big bullish run. What is this candle right here? Well, it's called a spring, or again, a hammer. We just went through that. And then what kind of effect happens after this accumulation cause? It's an effect markup. It's a big rally. And this is Tesla. In fact, you guys, this was just the start of the rally. Look what happened next. So here was that pattern, and look at this move. Yep. It had some really good earnings, but come on now. That was somebody was buying down there. All right, so here we go to the next one on shop. How many of you like to trade shop? What kind of candle pattern is shown here? 3 candle pattern. And if you didn't guess it, it's an evening star pattern. We have the green candle, then we have a little doji, small-bodied candle up in the air, the star, and then we have a reversal red bearish candle. And what happens when we get this? We go down, right? And you can see We certainly did go down after that one. But look at the bottom. Look at those last two candles. Do you guys think that we might get a reversal here? I'm going to blow it up for you. Yeah, what candle is this? We went over it once, but we'll do it again. Repetition is amazing. That's a bullish engulfing at the end of that run down. And what happens? We go up, right? Yes, we do. Look what happened next. There it is, and up we went. Don't you guys love this? And especially because it had a lot of volume on it. Yeah, this is fun. And I like to enter personally. If I was going to trade shop, I like to enter above a major level. Like the major levels are the $50 increments, $250, $300, $350, or even the $25. But look here, see this 300 level? So personally, I love to enter when we break up above a major level. Those are the best entries, and we go up, up, up. All right, let's do another one. Which pattern is this one? Right here. You should get this pretty quickly, right? It's a bearish engulfing, and it's on a weekly chart. Yeah, that's really powerful. When you get a bearish engulfing on a weekly chart, it's more powerful than a daily chart, but a daily chart is more powerful than a 15-minute chart, which is more powerful than a 5-minute chart. You get it, right? And look at the volume. And guess what we got at the top of this bearish engulfing weekly chart? A massive dark pool print. That's right. 948,000 share print. This is like unheard of. This like never happens. 170.50. My traders rocked this on the short side. And we went all the way down to 100. That's the major level, right? And we bounce. Computers are loaded to buy there. So let's move on to the next example. What kind of candle is this? Oh, we've done this so many times. You know it, right? High volume hammer. And we go up right from here. And look at that. We certainly did on Costco. Yep. And look at that. I mean, that is a big volume. Yep. Definitely seller's exhaustion has exhausted at the bottom there. And then we come up to this other candle. What kind of candle is that? Well, many people will call it a shooting star. Yep, or an upthrust. And what do you think happens next? High volume. Volume is the key. We go down, right? Look what happened. We went all the way down after that. Here's another pattern. Which one is this one? We went over it, and we'll do it again. That's an evening star at the top, and you can see we do go down after that. All right, let's do another one. This is Mo. What are these candles? Take a look at that. Lot of volume. Hammers at the bottom is seller's exhaustion. High volume candles. And what's this line here called? It's the creek. Exactly. And this is the accumulation. The more times you see this, the more you're going to recognize it on your charts. And the cause and effect is up. All right, so here's another one. What kind of candle is shown here? High volume doji, right? And we went up after that. So which candle is shown right here though? 3 candle pattern. Seller's exhaustion, high volume hammer, and also a morning star. Yeah, but it's a little bit elongated. See that big red candle? Yeah, so again, got to be a little creative there, but yeah, it's a high volume hammer, seller's exhaustion. All right, let's go to another one. Which candle pattern is shown here? bullish engulfing, right? You guys are getting faster at this. And you can see we had a really big upward move after that. Up, here's another one. On high volume, what candle pattern is this? You know it, high volume doji. And we closed above it the next day and off to the races we went. And it's also a morning star as well. See the red candle, the doji, and the green candle? Yup, same exact effect. All right, let's go to another one. Here's a 5-minute chart of the Russell. So people ask me if they can use candles on a 5-minute chart. And my answer is yes. You can absolutely do it, but keep in mind, it's going to be a shorter term movement than a daily chart. Now, it's not the best. However, look at this evening star pattern and how it moved down. Now, the coolest thing is I like to overlap it with a 15-minute chart in the same time period. That was at about 11:10 right here. And look at that. On a 15-minute chart, we have a dark cloud cover, and that's also a bearish pattern, which is pretty cool, right? Now look at the weekly chart here, right? You can see we've moved down quite a bit. They're very powerful, these bearish engulfing, right, on a weekly chart. Extremely. Yeah, so I do love to look at the weekly first and then work my way down, because sometimes your best entry is off of a 5-minute chart or the daily chart, which is what I use a lot. All right, let's do another one. What kind of candle pattern is this one? Bullish piercing, right? The green candle goes below the red, but then it fights its way back and closes above a half or above that red candle's body. So it pierces it with a bullish candle. So I think you guys are getting this down, right? Look at that big move that happened. Yeah, you guys did really well. You know, learning basic candle patterns is great, but you got to keep in mind you have to use them with increasing volume. You know, the dark pool is always going to be my #1 indicator. And, you know, but learning these basic candle patterns is so great, though. So it's a great tool to have, especially when you have the prints and the volume. So now we're going to turn into a whole new section of the insights. I get a lot of questions from traders. They don't know what to trade. Steph, I don't know. You put out so many recommendations. I don't know what to take. And my question always is, like, what kind of trader are you? Many of you probably don't even know that yet, especially if you're brand new. You have not figured that out yet. You know, there's so many things that we can trade every day. So how do you know which stocks to trade? So in my daily whispers, I give you so many incredible trade setups. How many of you like to trade the major index ETFs, or the oil futures, or the gold futures, or the Dow futures, the NASDAQ futures? Well, in my daily dark pool whispers that I do every morning, I put them all there for you. But if you don't trade futures, don't trade them. Trade the SPY. I personally, out of all of these stocks, I want to say 90% of the time I trade the SPY. That's my favorite. That is what kind of trader I am. Now I also give out stocks to trade. So this is from December 16th, where I had Micron, AMD, Apple, PCG, YNDX, Boeing, Uber, Tesla. Personally, I will trade Uber. I'll trade AMD. Those are my favorites. But I have a lot of traders in my room that love to trade Tesla, love to trade Apple. Personally, it's not my favorite choice. But it's really important to know if you want to trade slower pace stocks or more expensive, faster pace stocks like Boeing and Tesla. The other thing you have to realize as a trader is, do you want to be a part-time trader or do you want to be a full-time trader, right? Now, part-time can mean so many different things. You may be retired. And you may only want to trade part-time because guess what? You want to play golf. You want to play cards. You want to travel. So you may trade a couple days here and a couple days there. Or you may have a full-time job and you want to learn how to trade while you're working so that you could do this full-time, right? So that's really part-time. And some of you may want to retire from that job quicker than others, right? So knowing your goals is so important, you know? It's the first step in preparing what you need to do to get there. I mean, think about all the careers that you've had in your life. I mean, how much time did you prepare for that job? Did you have to go to college and get a special degree? Did you have to do interning? You know what I associate learning how to trade and interning with? Paper trading. Yeah, same thing. You're working hard and you're not getting paid yet. But guess what? The more interning you do, the more paper trading you do, the faster you're going to get to getting a paycheck. Yeah, learn the ropes, you know? Did you start out as an assistant? That's what happened to me. I mean, I started out as an assistant to one of the best traders and I worked under him for 2 years. I learned everything. You know, I wanted to do this full time. I loved it. So if you want to make this your full-time career, you have to treat it like one. Do the same things you would do for other careers. I mean, invest in yourself. And when I say invest, I mean if you need to take specific courses to learn how to do it, invest the time. It takes a lot of hours to master something. And you need to invest in that time if you want this badly enough. If you don't, then don't do it. You know, I used to go into my office on Saturdays and input stocks into my Insight scanner. And we're talking back in the early 90s. And I still work on the weekends. I prep for the week. You know, this is what gives me the edge on Monday mornings. I have all my trades mapped out and I'm ready to go. And I also wake up 3 to 4 hours before the market actually opens up because I want to study the pre-market price action. And that gives me an edge. That's why I am successful, because I do put in the time and energy that's required. So after you figure out how much time you want to put into this, you need to figure out what kind of level of trading you're most comfortable with, right? And also, if you cannot be at your desk all day long, you're going to find it really hard to be a day trader. Don't say I want to be a day trader and not be able to be at your desk to watch every small little tick that happens. Your best bet would be a swing trader. And I always tell my traders that are part-time traders that have other jobs or can't be there to focus on the massive prints that I post. Those are going to be the massive moves. I want you to wait a few days or sometimes a week or two before jumping on those swings. For example, here's one. October 21st. There's my post. Holy moly, another massive print on Apple. Okay? We had huge massive prints at 261.98, and as you know, Apple moved up a lot. In fact, look at the chart. So you didn't have to sit at your desk all day long watching every tick. All you had to do was wait a week and see that these guys closed above all the prints after that, like a little initial shakeout, and up it went. Okay, so there's different kind of trades you can do with the dark pool, but if you wanted to take it tick by tick, then you can be a short-term day trader or an overnight swing trader. And I do teach you how to do all three of those things. Okay, so we're going to move on to the 3 different trading levels. I'm going to talk about them a little bit more specifically. So we have 3 levels. The first one is me, mild and conservative. But some days I can get a little aggressive and edgy. That's the second level. And the third is full-blown psychotic. So mild and conservative, your heart is calm. You're not having a heart attack. You're relaxed. You're like in Zen mode trading. Yeah, very robotic, very cool collective. And a little aggressive and edgy, same thing. Your heart might beat a little bit faster, but you're still in that same zone. However, when you get into trades that are crazy, you guys know what I'm talking about. You having a heart attack. You don't want to trade that way. Trust me, that is no way to trade. So whenever I get into a stock that I don't know and all of a sudden my heart starts to race faster, I immediately get out of that trade. It's not for me. That's not the kind of trader that I am. Or sometimes I'll be trading one of my mild and conservative stocks, and I'm going to go over those. But my position is too large, and my heart starts to go because my risk is too high. So either your position is too large, or you are trading a stock you should not be trading, and that is why your heart is racing. Okay, so figure that out pretty quickly. So let's start out with mild and conservative stocks. I am born to be mild. What kind of stocks are those really? Well, they're going to move, okay? It doesn't mean we're in something that's dead, but it has a penny spread between the bid and the offer. Here's Bank of America. The bid is $28.76. The offer is $28.77. So if you were to buy the stock at $28.77 and all of a sudden you had to leave or you decided you didn't want to be in this anymore, guess what? You turn around and you sell it for a penny loss. That's not a big deal, right? Yeah, that's mild and conservative. A lot of stocks have very big spreads. You turn around to sell it and you already lost a quarter. The liquidity is really important. You can see at each level, there is more than one share to buy and sell. So if you wanted to do 5,000 shares, you can easily get in and out of this, no problem. You have to add 2 zeros. So it's 33,000 on the offer and 32,600 on the bid. So here are some mild and conservative stocks. We have Bank of America. We have United States Oil Fund. We have Freeport. We have XLF. That's the financial ETF. We have Vale, AT&T, Kroger, American Airlines, Verizon, GDX, Snap, XOP. Oh, I have GDX twice. I really like that. We have Coca-Cola, and SPY options are really liquid. They're mild. I absolutely love them. Okay, so let's move on to the next one. The next level. A little aggressive and edgy. So sometimes I will get into some of these, but I do trade options on them. So it makes it less edgy and aggressive. So they have more than a penny spread and less liquidity. So here's Delta Airlines, level 2. So if we were to buy this right now at $50.57, there's only 100 shares on ARCA. Yeah, 100. So I can't even buy 500 shares at this price level. I have to pay up to $50.60. And then if we turn around and change our mind and sell it immediately, we lose a couple of pennies there. Depending on how much we have to sell, you can see that it goes down pretty dramatically. So these are all the stocks that are edgy and aggressive. A little, not a lot, a little bit. We have AMD, we have Delta, BP. American Airlines can get a little bit edgy some days, and some days it can be mild. Depends. You have to really check it out. BP, Tesla, Roku, Shop, Baidu, Apple, Facebook, GLD, STM, TLT, Costco, Nike, Starbucks, MU. So if you trade these stocks on this list, but your heart starts to go, you don't like the fact that you lost a lot quickly, don't trade them. They're not for you. But if you trade them well, you have no problem with them, then keep on trading them. Now here's also another thing that I tell my traders is if you normally do 500 shares of a mild stock and then you want to trade one of these aggressives, do smaller share size. Bump it down to 300 or 250 and you're good. You'll see you'll trade it much better. Okay, let's move on to the full-blown psychotic trades. You know what I'm talking about. Drugs, biotechs, pharmaceuticals. These guys are nuts, okay? They are. Not a day goes by when I don't see one of those crazy biotech stocks gapping up big, gapping down big. I'm not a doctor, so I don't know what drugs are coming out. I don't know how the FDA is going to approve it. I don't know if somebody's going to die overnight from one of them. It's like playing Russian roulette. I personally would rather trade gold, oil, tech stocks, banks, any other day besides a biotech. So please be careful out there. Okay, I have to warn you to stay away from drugs. Unless they have really cheap options, and then you at least know you're only risking a very small amount. Okay, so let's go over my whispers. So on a regular day, this could be any one of my whisper trades on all these stocks. So for example, if you're a mild trader, then you'll probably want to trade the SPY Whisper, the USO, SNAP, FCX, GDX, or XOP. But if you like to venture to the wild side, then you're gonna, want to trade. If you trade oil futures, yeah, those are pretty edgy. You can lose a lot really quickly. But AMD is a stock that's edgy. Apple, Facebook, and GDXJ is slightly faster than GDX. So both gold stocks, if you want to go on a little bit higher speed, go ahead, go for it. GDXJ is great. Costco, Roku, Tesla. They're not psychotic. They're just edgy. Okay, so here's my rules on paper trading, right? So you're an intern now. Yep, I want you to do this for 6 successful weeks. Prove it to yourself. And I know many of you are not going to want to do this. I know you're not. I want you to prove to yourself that you can master this and you can be successful for 6 straight weeks in a row. You're going to learn things. This is a new strategy. For many people, you may be trading for 40 years, but when you come into my trading room and now you're trading my strategy on the dark pool or anybody else's room trading any other new strategy, go ahead and prove to yourself that number 1, the strategy works, and number 2, that you can do it. Okay, so that's number 1. Once you've mastered it, we have to know if you have any I want to say strengths or weaknesses when it comes to money and share size and all that stuff, your risk. So I want you to start out small. You have to start out small. If you're trading stock, 100 shares. And you don't have to worry about commissions anymore. Commissions are free on so many brokers. It's great. It used to be different when it was $4.95, $7.95. My traders would say, well, Steph, I can't do 100 shares. Look at all the money I'm paying on commissions. And they kind of were right. They had to bump it up a little bit. But now we can start on 100 shares. Or start with 2 contracts. You don't want to do 1. You're going to have severe exititis. So start with 2. When you're making money consecutively for a week straight, bump it up to 200 shares or 4 contracts. And if you're successful for a full week, fantastic. You got this. Bump it up. Bump it up to 400 shares, 8 contracts. But let's just say all of a sudden you don't have a good week. I mean, you didn't trade correctly. You did not trade correctly. And you lost money. You were letting stock stop you out. You start to take profits too quickly. What's happening is that we're trading too big share size. We're not comfortable. And this happened to me when I was trading 500 shares of stock back in the 90s. My whole trading table was trading 1,000 and higher. And I just, I was learning and I was doing 500 shares and I was doing really well. And I said, yeah, why not? Let me bump it up to 1,000 like everybody else. Oh no. All of a sudden, I was not trading right. I was nervous. It was just too much risk for me. So I went down to 500 and I stayed there and I was happy and I did extremely well. I took a lot more positions than everybody else at the table, but I just felt comfortable at 500. So whatever it is, it doesn't matter how much money you have. Okay? We all have a different risk aversion tolerance where we feel comfortable with share size. So if you're uncomfortable at 400, bump it back down to 200, maybe do 300, see if you're comfortable there. But I'm going to probably say 200 is more your speed. Okay, so, but what happens though if you did so well on paper, but all of a sudden it didn't matter what kind of share size you did? With money, you did not trade well. You got nervous, you were sweating, it was awful. You didn't understand. And then you went back to paper because you thought that maybe the strategy wasn't good still. And you went back to paper and you did well. And then a week later you switched to paper and you didn't do well. And you kept doing this. Well, I'm going to tell you something, that you have an issue with money. Yeah, and that's something that I can absolutely help you with and advise you on what to do with that. You know, people could be worried about money in general. For example, you may not have enough money for retirement. Yep. Or you are just learning how to trade and you expect this money to pay for all of your bills. This is definitely going to affect your trading. It's almost impossible to trade correctly when you're worrying about money. And what I tell my traders to do is get a part-time job so that you have income coming in while you're learning. You know, you're going to learn for a while. You're going to start with small share size and you are going to work your way up. And then one day you'll be making more money trading than your job. You'll save money and now you won't be nervous and you don't have to have that part-time job. But in the interim, while you're learning and really mastering this, yeah, you definitely have to do that. You have to experience the market. You have to practice. You know, it takes a little bit of time, but you're going to get better and better and better, and you're going to grow more confident when you see trade setups working out. And before you know it, you're just going to be trading unconditionally. But again, before that happens, you have to make sure you have either income coming in or income set aside while you're learning. So, did you know that when you're doing work you love and you start to make money, a distressing amount of guilt can crop up? Yeah, you're unethically taking from others. Yeah, when it comes to trading. People always say, but who's on the other side of the trade, right? There is somebody on the other side of the trade. So many of us carry an ingrained subconscious belief that we are not worthy and deserving of money. But why do you feel this way? Like, why would you ever feel guilty or uncomfortable about receiving money? You're receiving abundance. Some people feel uncomfortable when they're receiving compliments or gifts. And I know some of you are shaking your head right now. If you're worthy of breathing air, why does it have to be so different when it comes to wealth or financial prosperity? See, in the society we live in, our caretakers and teachers, they always taught us that we have to prove ourselves in order to be deserving of anything good. Prove ourselves, right? Including success, love, happiness, even money. And the same goes for manifesting money. Like, many of us were manipulated to believe that we could not obtain wealth without hard work. We were taught that we had to prove something to achieve our success. How many of you grew up in a house where your parents told you money doesn't grow on trees? What does that tell you, right? So here you are clicking buttons. You're not out there in the field as a slave worker working for a big corporation. You're sitting at home in your pajamas. You're clicking buttons. And guess what's happening? You're making money, more money than your friends, your neighbors, your husband, your wife. and you start to feel guilty. Okay? You start to feel guilty because money doesn't grow on trees. And what do? You can self-sabotage yourself at that moment to prove to your parents, you're right, money doesn't grow on trees. But guess what? I worked my butt off. I woke up at 3 o'clock in the morning. I worked on Saturdays mapping out these trades. I deserve this. I did work hard, and that's how I want you to look at this. Because if you believe that you're not worthy of anything good, your results will reflect this type of mindset. In fact, you'll take the wrong trades, and therefore you're going to make the wrong moves. You'll develop procrastination tendencies. You're going to sabotage your progress. And I don't want you to do this, okay? Because you're going to hesitate on acting on great trade setups. And these are the trades that are giving you incredible profits. In fact, you worked hard. You studied. You took classes. You paper traded. You learned how to do this. This is a career if you treat it like one. So I want you to get rid of all that negative stuff, okay? You are worthy of money and everything good in this world just because you are, okay? You don't need to justify it, just like you don't need to justify the abundance you get to enjoy every day, such as the air you breathe. This is deep, you guys. I go deep into the psychological things because you wouldn't believe. I mean, I have traders, thousands of traders that come to me over the years. And even though I trade them a fantastic strategy, and I know it works, it's been proven, there's psychological stuff that's going on in the background. And this is stuff that we need to hit head on. Some of you have none of this, and that's fantastic. But I'm guessing that many of you have been down this road. You see, trading is an occupation that's based on making many decisions. It's different than, let's say, cleaning somebody's house, right? That's what you do for a living. You don't really have to think and make decisions. Well, maybe should I clean the bathroom before the kitchen? But you're going to clean the whole house. It's all going to be great. But when you're trading, oh boy, there's a lot of decisions that you have to make. And if you don't feel confident in your decision making, you're going to have a hard time. You have to decide, what stock should I trade today? When should I enter? When should I exit? You know, these are really important things, and you have to be confident in yourself. And so I believe in a systematic approach to making decisions. Yeah, there's 7 basic things that we need to have. And if you have all these 7 things, you are going to do amazing. But you have to have these 7 things. You have to create a constructive environment. That is taking this serious. Have a workspace, okay, that looks like you are ready for success. Like, what does your desk look like right now? Is it neat? Is it organized? Or do you have papers all over the place? Now, I know that throughout the day I have a lot of sticky notes. Oh my goodness, to remind me of things. They're everywhere. I have 6 monitors. They're on all 6 monitors, okay? But at the end of the day, I review all of them and I take them off and I start fresh tomorrow. Organization is a sign of control. And as traders, we need to always be in control. So important, okay? So make sure you do that. Clean off your desk and make it look amazing, okay? Ready to succeed. Okay, number 2, investigate the situation in detail. Okay, so what I do is I get into the zone before the market opens. Yeah, I get into the zone. What does that do? Well, I'm watching pre-market activity. Okay, so I'm investigating the market situation in detail. I am up before everybody else, and I'm able to see where the buyers are buying and where the sellers are selling. So that when the market opens, I've already investigated the stock. I know where the guys are. I don't have to guess or look back or take time. I am in the zone and I am ready. So the third thing that's really important is generate good alternatives. Because, right, life isn't perfect. Things happen. We thought something was going to go this way and it doesn't. So I always say that when I'm trading, if the stock doesn't do this, I'm not going to do this. Or if the stock does this, so if FCX breaks above $13, I am going to buy the 1350 calls. Or if FCX breaks below 1250, I'm going to buy the 12 puts. So I'm prepared on both sides. If it hits this level, I'm going to sell half. I'm always generating alternatives, making decisions based on price action that's happening. All right, the fourth thing that's really important is exploring your options. So we need to explore all our options. Having stop losses. If it goes here, I'm going to get stopped out. If it goes here, that's going to be my target. Before the market opens. I can't tell you how many times traders say, Steph, what do you think about this stock? And I go, well, are you in it? And they go, yes. And you haven't thought about where your target is? No, I don't know where I should get out. Well, that's not a good way to trade. Either the trade's going to control you or you're going to control the trade. So always have a stop loss, always have a target. This way, we're emotionally stable when things start to move. We don't have to worry and think about, do I want to get out? We've already done that. I can't tell you how many times I'm in a trade and news comes out. Okay, and I know my target's 25 and news comes out and bam, it hits it so fast. And guess what I do? I pull the trigger really fast because I've been mentally prepared to get out at 25. It's already been ingrained in my brain. I don't have to think. Thank you so much for that news, because you know what happens? It hits 25 and it comes down really fast. And I'm sure many of you have been in that situation. And if you have not mentally prepared to exit at 25, when it gets there, you go, oh, wow, look at that. It's going up. Oh, it's going to go up more. And then it doesn't. It comes all the way back down. And what do? You don't get out. And you end up losing on that, okay? So really important to explore our options and be prepared. Number 5, select the best solution. So by having multiple options, we can evaluate our risk and rewards, and we can make the best decision for ourselves. So what I do in this situation is a lot of times with options, I look at many different chains, strikes, expirations. I look at all of them, and then I pick the best one for me. And that's really important. Rather than having to make that decision in the heat of the moment. So if I know I want to trade FCX today, I'm going to already be prepared knowing that next week's options are going to be better than this week's. So I don't have to make that decision when it's happening. The next thing, number 6, is evaluate your plan. So the evaluation is based on how much money we want to risk on every trade. You should know your contract size, your share size, and you should know your stop losses. How much are you going to risk on every trade? And number 7, by communicating your decision and taking action, okay, you're going to be ready. Yeah, we've communicated this and we're ready to take action. Sometimes you need to say it out loud. I do it in my trading room because I'm always on the microphone. So I'll actually tell my traders, this is what I'm doing. I'm taking this strangle because this happened, this print happened. And then at the end of the day, I do it really quickly. I've already communicated it. So you can type it into a chat box. You can write it down on a piece of paper. Whatever you need to do, you have to communicate it because it's going to really help you take action. So decision making is a top component to being a successful trader. And there are, many people that are not great with making decisions in their lives. You don't want to carry that over into trading. And, if you can become a very disciplined trader, many times, guess what? That's going to carry positively into your personal life. And I know there's people out there that are going to tell you, oh, you can't do this, or your decisions are, haven't been good. And then they come into the trading arena and they're scared to take a trade because it's a decision. And I'm going to tell you, even if you do everything right, Not every trade is going to work out. And guess what? That's fine. That's amazing. Okay. You took a trade. You took a high probability trade. I only like to risk a little bit. My reward is really big. And if I put 10 trades on like that, 7 are going to work out probably. All right. Guess what? 3 are not going to work out. And that's amazing. You know how great that is when 7 works out and 3 doesn't? And that's awesome. That's healthy trading. But a lot of people can't handle when one trade doesn't work out. They take it personally. And people, it's a numbers game. Okay? I want to keep my losses. I want to lose 10 cents, 12 cents, 20 cents on those 3 trades that didn't work out. But the other 7, guess what? I'm going to make 40, 60, 80, $2 on those. And I'm going to do very well over time. I made decisions. Some of those decisions are going to turn into successful trades. And some of those decisions still were great decisions, but they didn't turn into successful trades. Cut them off, move on. There's so many amazing trades to take. You just have to figure out what kind of trader you are. And you have to, be organized. You have to plan. You have to map it out. And you have to have a great education. Invest in yourself. You are definitely worth it. So there you have it. That's this week's insights. I am going to be coming back to give you more live trades next week. I'm excited. I'm going to be back from my vacation, all rested and ready to go. So until next time, happy trading.
No thinking, that's my secret. Gonna keep it my secret. My secret.